what we're here to talk about is new year, new budget, more money. The whole point of us as entrepreneurs in business is, my presumption is, it's to make money. There are other reasons as well, but one of them, if you're on this call and you don't have an objective of making money in your business, you are in the wrong place, because that is something we're going to cover today, because it is one of the keys for a whole bunch of reasons. Most notably, it can pay for your passions and build your wealth. So let's dive in. And first of all, we are going to, I'm not going to do a whole lot of introduction here, but I am going to tell you that I have worked with a number of one-on-one with a number of entrepreneurs, some of them current clients, some of them former clients, prior clients that you may know. And all of them have various types of businesses that are, we would consider new business today. Internet coaching, one of them sells e-commerce, another one does publishing, another one is actually a choir, but another one makes puppets for the Saturday Night Live show. But the point is, I've gotten a lot of experience, and before this, there was 30 years in corporate. So that is my very short way of saying I know what I'm talking about, so hang in there with me. Second of all, everybody likes to know our whys, right? Well, you're looking at my whys. Everything that is a why to me is on this page somewhere. And we just blessedly had a Christmas together, which was just wonderful. So this is my family, and this is why I do what I do. All right, we're going to jump right in. So what are the 3 keys of the 5% of the businesses who succeed? So here's what I want to say about that. Right off the bat, we know that 5% of the small businesses that start up fail. I mean, succeed. 95, what that means is 95% that start never get out of the gate. Now, I can't necessarily tell you why all of those businesses don't make it, but I can tell you that the 5% that do make it know and understand their finances, okay? So what are the 3 major things that each of these people have a handle on? One is cash flow, one is profitability, and one is value, the value of their business. Those are the 3 things, and the only 3 things, that every business owner has to know and has to underlie their business if they're going to be one of the 5% to succeed. So we're going to go through these one at a time and give you a tool for each one that'll let you make a difference in that category next year, if you're ready to. Some of you may have seen, I recognize some of the names who are attending. You may have seen one of these before, but you haven't seen the other 2. So let's start with cash flow, because truthfully, we all know you can't get out of the gate without cash. And very many of us do what's called bootstrapping. What that basically means is nobody's handing us money. Nobody's lending us a lot of money. We don't have a lot of money to put in our businesses. We have to make money in order to spend money in our business. And that is what most businesses coming out of the gate have to do. There are some that are lucky, they have startup investment money. And I would argue, actually, in those cases, it's equally as important to understand your cash flow, because the investors who are putting money in want to know where that money is going and when they're going to see a return on it. So let's just dive right in. So when you guys get this workbook, what you're going to see is, first of all, it'll be downloaded from Excel. What you got is a link to a Google Drive, and it'll tell you you have to take a copy of it. The minute you create a copy, that'll be right there on your Google Drive. If for whatever reason you can't access it that way, let us know with an email. My email address is all over the emails you've gotten about this. Shoot me an email. We'll get you a copy of this thing. So the first tab, you'll see that this lines up with the 3 things we're going to cover. The first tab says cash flow. The second tab says profitability, and the last 3 tabs say value. Okay, so we're going to start with cash flow here. And let me make sure I still have you guys. I think I do. Yep, I do. Okay, good. So when you are looking at next year, I want you to think about the first 12 weeks of the year, and that's it. And this is so important to start. First of all, there are only 3 things you need to do this. Okay, this exercise is so easy, and it tells you so much about your business. You need 3 things. You need your bank statement, or access to your online bank information. You need this spreadsheet, and you need 15 minutes of time every week. Okay, because what we're going to do is we're going to go ahead and say, all right, let's figure out what we think is going to happen to our cash flow in the first quarter of the year. So we're going to start with putting the last day of the year right here in this box, 12/31/22. And what you're going to see, if that's not there, those dates are blank, but you can put whatever date you want to start in here. But we're going to start at the end of the year, and you'll see that you get the end of every week after that for the next 12 weeks across the columns here. So each of these columns represents a week. Now, the next thing I want you to fill out is right here. And the number that should go here is when you start to sweat, if that's the number in your bank balance. For some people, that's $100. For some people, that's zero. For some people, that's $100,000 if they have payroll to make that they have to be ready for. But what's your number? For purposes of this example, let's just say it's $5,000. If my balance ever goes below $5,000, I get a little bit nervous, okay? Now, what you want to do the very first thing right out of the gate, day one, when you do this, it's January 1st or January 2nd. And what is, when you look online at your bank statement, what is the balance in your bank account, in your checking account? If you have a savings account to your checking and savings account. Now, I'm going through this for your business. You can also do this for you personally. This is as good as a personal budget for you personally. But we're going to pretend we're a business here doing this. And we're just going to drop that balance in here. And let's just say it's 72.50.25 cents is what's in my bank account. Then you are very simply going to think about the coming week that ends on January 7th. And up here where it says cash receipts, you're going to type in the different kinds of things that cause money to come into your bank account. And if you have trouble with this, look at your bank account and see what kinds of deposits you get. So for most people, let's say maybe some people get a Stripe deposit every week, and some people get a QuickBooks deposit, and some people get checks and they deposit manually. Who knows what different types of stuff. You could do this by customer if you have customers that pay you at particular times, because you can always insert lines here. So you can make this as big or small as you want. If you want to insert a line, you just add one in to insert the whole row, and this table will grow. So let's just say very quickly, because I don't want to spend a ton of time on this because it is so straightforward. Let's say we think we're going to get, we've looked at Stripe and we think we're going to get $1,200 from Stripe. We know that somebody's going to pay their invoice of $600 tomorrow. And we know we've got $340 of checks to deposit. As far as we know, that's all that's coming in. It's going to add up to $2,140. Now comes the little bit harder part. And I know it's very easy to say I have no idea how much money is coming in next week, or I have no idea how much money I'm going to spend next week. But I'm going to challenge you. If you're going to take responsibility and accountability for your business, that's a little bit of a cop-out. You do. And you know a lot more than you think, and you need to start giving yourself credit for that. Number two, if you even want to give that part up, you can look at your bank statement at the same period last month and see what kind of bills were paid during that period. And let's just say for ease, so that we can go fast on this, we have an admin assistant and we have some travel we know we're going to be spending money on, and we know we're going to get charged for software. So those are the only three things we think are happening this week. I know I pay my admin assistant $100. I know that I pay my travel. I have to buy a plane ticket. It's going to be $500. And I know my software that's getting charged is a year of something, and it's going to be $1,200. And that's going to happen this week. And now what's just happened is we've now got what we think the balance of cash right here, where it says end of the week. We can look at this and go, wow, if things play out the way I think they're going to, I cash on hand at the end of the week, which is both down here and up here in these two cells, is going to be 75, 90, 25. Cool. We've just forecasted the first week, but don't stop there. Now I want you to basically fill in every single week the same way. Now I'm not going to do that here completely, but I'm just going to do a couple of examples. I'm going to drag that across. I'm going to say that we're going to get this 1,200 once a month or so. I'm going to put in a couple of expenses. Let's say we pay our admin every week, and we know that we're going to have hotel costs associated with that travel out here in this week. And we know that we got another big software buyout here in this week, that's a bill that hits for $2,200. All right. Now, this in and of itself, you're probably thinking, okay, so what? What do I know that I didn't know before? Well, you know a lot. So what you can see here is at the end of each week now, you can start to predict what your bank balance is going to be. And the cool thing about this is at the end of the week now, let's say it's January 8th, you can go back in and see how right or wrong you were about this week and put the real numbers in here. Because what's going to happen when you do that is all of a sudden these next 11 weeks, and if you want to, it's very easy to just copy this column on and create another one. That's the next week. Now you can do the next 12 weeks. And so what you've got here is a look at this. And the reason this is so important is I'm going to put a little example in here, and I'm just going to put a big expense of, let's just call it $9,000 here. I don't know, say I'm planning on going on paying for some coaching or something. Something happens here that really can't happen. And back here, I'm going to put, let's just put a $6,000 charge here. Now, a couple things have happened. Number one, you see how all these cells all of a sudden lighted up yellow? Because you have 5,000 as your tolerance level, if there's ever a balance based on your plan that you've just keyed in, that's going to be something you can't stomach, it will show up here like this. So let me pull this off for now. But right here, you can see, ooh, my balance is going to be a little lower than I want here for these 4 or 5 weeks. And this week in particular makes me very nervous. So maybe I'm going to get the monthly version of that software instead of the annual. Sure, it costs me a little more over the long run, but if I only pay $240 for it, I'm out of the woods the next week. Now, like I said, other people might have a tolerance that's $500, and then none of those would have alarmed for them. But in our case, it's $5,000, and we got the red alarm. Now, let's talk about that $9,000. We all know this can never happen, right? This number just went negative. And you can't go negative in your bank account. But the cool thing about this now is 8 weeks ahead of time, you've got a problem. You're not just tripping on an overdrawn notice, right? You can see, wow, I need to think through my business right now for a hot minute because I can't do what I'm thinking of doing. And then you can come back and play with all this stuff. You can potentially, I'm going to show you the business levers in a minute, but there are a bunch of things you can do and play with to adjust things. You can say, it looks like I need to raise my prices, or it looks like I need to spend more time in marketing so that I can bring in more revenue here. Maybe you know that out here you want to hire someone, whatever you want to say, it's a new person to help you with your marketing. Take this out for now. You say, okay, I know I don't want to do it while I'm still under my threshold, but how much can I afford out here now? And you can see, okay, I've got a good bit I can afford. I could afford to pay him. If I paid him, let's call it $1,000 a month, how does things look? And everything will update for you and you'll see if it'll be a problem. So it becomes your playground to test everything that you're planning. And cash, truthfully, if you do this and neither of the other two things, then you will at least guarantee you'll be making the decisions ahead of time to keep cash flowing in your business. Now, say that you don't have any things you can change, right? And that'll happen sometimes too. And say this is $7,000 and we go negative. Well, this is the kind of time, you know, now 8 weeks ahead of time or however many weeks that is, I need to look at getting some credit available to me because I can't fix that in 8 weeks. So I need to think about either getting some credit or using some credit that I already have. Or I need to think about my business and whether I need to cut back on things I'm paying for. Now, the wonderful flip side can happen too, okay? And in this example, let's just say you look at this and you go, okay, this is great. Cash looks good, cash looks good, cash looks good. And let's just say that just for fun, let's carry this guy across here. And we look at this number and we're like, holy cow, we're building up a lot of cash in here we don't need. And by the way, I'm exhausted. So, wow, I really can hire someone. I can hire 2 people to help take some of this stuff off my plate. So you can start to see, because one of the things anybody who's worked with me knows is I talk about the energy of money and the energy of time are both important and somewhat interchangeable. So if you're exhausted and piling up cash, you know you've got a reserve that you can help now use some of that cash to buy back some of your time. And we'll get to that a little bit later as well. But that is the cash flow forecaster that's in your packet. Very straightforward to use. I highly, highly recommend it and maintaining it. Every client I have has gone through this process, especially if there are changes coming in their business or a new year. So 15 minutes a week, guys, that's it. Jump in, do it. Trust me, it's worth every second you spend on it. All right, now, so the instructions, just to remind you, and you'll see it, you'll have the sheet. You can play this video back as many times as you want when you get the replay link. You input the beginning bank balance. You estimate each thing that's going to bring cash in next week. You estimate each thing that's going to take cash away next week. You repeat that for the 12 columns, the 12 weekly columns. You see if there are any balances that are lower than your threshold. Then you adjust things in the future. As things change, you adjust them so that it becomes an ongoing, updated, live worksheet for you. And then the next week, you fill in the actuals, learn and adjust. All right, that's cash flow. That's your tool. That's your instructions. Trust me, that's a game changer in your business if you've had a hard time getting a hold of what's going on in your finances, because all you're doing is starting with your bank account. Okay, doesn't take into account your credit cards. One of the things leaving your account will be your credit card payment. So that is something that you'll see in there as one of those cash outflows. But you don't even need to dive in that far to figure this piece out, which is so crucial to your business. All right, on to the second key. When still no specific questions on that?
We do have one question from Jan Sugar. It says,
Okay.
what do you do about life forecasting? This is all business. Where do they intersect? What it costs you to live?
Great question. So what I was saying, and Jan, you may have missed this at the beginning, you can do the exact same thing with your personal bank account. And in a lot of people's cases, if they're still solopreneuring, some of my clients are doing this, their personal and their business stuff is still mingled up. You can just do the whole mingled up balance that way. So that's how you take care of it for life. So we actually use these for personal finances for our clients and also for the business. I hope that answers that. Any others, one?
That's all for now.
Copies. Yeah, okay, cool. You can take as many copies of that spreadsheet as you want and share it with your friends. It's a useful tool. Very good thing for college kids, by the way, when they graduate. Just if you've got kids graduating college and they need to start taking care of things like rent and what to do with their paycheck and all of that, give them a copy of that bad boy. It'll help a lot. Okay, onward to the next key. Key number 2 to being one of the people who is successful in business is profitability. And I love this quote: no profit grows where no pleasure is taken. And if you're following me at all and you've gotten here, you know that as much as I'm pretty hardcore about money and being in business to make money, it is also meant to be balanced and part of enjoying life. Making money without enjoyment is not worth it at all. Working so hard that you don't have the ability to enjoy what you're building is not worth it at all. So I always relax and breathe and make sure that I am enjoying every bit of what I'm doing in the business of making a profit. And I just think this is an awesome quote. No profit grows where no pleasure is taken. Okay, so let's talk about profitability. We want to find out, going into the new year, is your business profitable? Do you make money on what you sell? And do you make as much money as you want to be making on what you sell? And this is something, technical term for it is the gross profit amount, or what I call a product contribution. It's how much your product contributes to paying the kind of overhead, the fixed expenses of your business and paying you. Okay, so we're going to walk through this a little more slowly than we did the cash flow one, because not as many people have seen this. Okay, so let's get started. What is profitability? Very simply, it's the price of what you sell minus the cost to deliver that service or product, minus how much it cost you to get that customer. Okay, so it's 3 things, not just 2. A lot of people stop right here and they say, oh, I'm charging $10. It cost me $2 to provide the service, therefore I'm profitable. But they forget that it cost them $30 to get the client, and they're actually unprofitable. So let's talk about this a little bit, and let's jump back over to our friendly spreadsheet and hope I don't lose you this time or get lost in the ruckus. Hang tight. All right, Wen, did I do it?
All good.
Awesome. Turning off the camera again. Okay. Now we're going to look at this tab number 2 that says profitability. And I'm going to make it bigger so you can actually see what's happening. Here we go. So basically there's a blank to put your company name in. If you put the company name in here in the first page, it'll carry through to all the other pages. And you can delete my name if you want to, but I kind of like it there. Kind of like I like it behind me, you know, reminds me what's up. Okay, so priorities group is my company name that I'm playing with here. And what you're seeing here, and I just want to go through it for you, is what I just showed you on the last slide. So you're going to have revenue, which is going to be the number of things you sell times the price. So let's just assume we sell one thing for now. Just as an example, we sell one thing. And let's say our price for that one thing is a $3,000 coaching program for now. And just stay focused with me on column one. Don't even look at these others right now. So it's a $3,000 coaching program. And if we sell one of them, we know we're going to make revenue, or sometimes that's called sales. Either one of those is fine, of $3,000. That's how much money we're going to get as a result of doing this. Okay. Now, what are our costs to provide that service? So let's say we are a coaching company. We do business coaching, and it costs us $500 to pay a coach to actually do the one-on-one work with this person in that program. Or maybe, let's maybe say $1,000. And let's say that we also send them a welcome gift, and every customer's welcome gift is $50. And other than that, we have a little shipping cost because it costs us $6 to ship the thing. So if you add all those up, the cost, you get $1,056, and you have what's officially called your profit margin. And here's where I tell you to be careful. A lot of people, like I said, stop right there and go, I'm making money, all is well. But the thing you have to take into account is you didn't get that customer for free, likely. Now, some customers come by referral, and if that's the case, you can ignore this bottom part unless you're paying some kind of an affiliate fee. But if you get your customers by doing speeches or spending money on social media, even if you're not doing ads, if you do pay for ads, if you have a marketing team who's just making you more and more well-known out there, if you have costs associated with getting that client, that's where we need to capture here. So I'm going to make a very simple assumption just for purposes of the example, is let's say that we know that if that the way people get into our program is they call us, we have a call with them. And we know if somebody calls us 8 out of 10 times, let's even say 5 out of 10 times, we're going to convert them. So we have what's called a 50% conversion rate there. So in order to get this one client, what this is telling us, working our way down here, is that we need to have 2 phone calls. So to get that one client, I had to have 2 phone calls. Now I need to know how many people need to know about me before I get those 2 phone calls. Like as an example, so here I'm doing this webinar, right? There's, I don't know, 30 people on the webinar, let's say. If there are 30 people on the webinar, I know through my team that about 10% of them are going to call, and I know how many of them I'm going to convert. But let's just say that I know that of all the people that get magnetized to my area somehow through ads, through social media, through referral, that 10% of them are going to actually come and have a call with me. So to get those 2 calls, I know that I need to have, working our way down further, I need to have 20 leads. I need to have 20 people at least hear about me so that 2 of them will call. Or in the case of this example, I need to have 20 people come to the workshop so that I know I'll get 2 calls. Now, that's not how it works for us. I'm just using it as an example. Now I want to know what's the cost per lead. Well, the way I figure that out, I know I need to get 20 leads. I need to get 20 people here. And let's say I'm not doing a workshop, but let's say that I do live speeches on stages, which I do. And let's say that right now I've got nobody's paying me to speak, right? Say I don't get a speaker's fee, but instead, they're the animals again. They don't like it that I don't get a speaker's fee, but I do, it doesn't matter. In this case, we'll assume there's no speaker's fee. In this case, say that you have to pay for a sponsorship to an event in order to get on the stage and speak and try and attract these 20 people. So let's say that you pay, just as an example, I'm going to say $5,000 for that sponsorship. Okay. And the reason I want to give you this example is to show you why it really hurts to ignore this part of the cost. If you look at this now, and this is what you did for every single client that you end up getting, when you start to multiply this out in your business, you are losing money hand over foot. Now, in this example, we're not going to keep it that way, but let's say that I do pay $500 to get on that stage. Okay. Now I have a real net profit number. It's my price of $3,000 for my one client that they paid me. Then I'm paying $1,056 to serve them, and I've paid $1,444 to get them. I'm sorry, I've paid, $500 to get them. So my net profit is 3,000 minus 1056 minus the 500, leaving me 14,444. So the other things down here are just interesting to me. One is my net return on the money I've spent is 0.93. So for every dollar I've spent, for every dollar I've spent, I've gotten an additional 93 cents over and above the dollar that I've spent. I have a profit margin of 48%, which is my net profit divided by my price. So what that tells me, okay, this 48% is important, because what that tells me is every dollar I get in revenue, I'm going to have 48 cents left after all those costs to use in the business. And then you know what it costs to get a client, and you know what your profit is for each client. And not coincidentally, the sum of those last two items equals your total revenue. Now, the power of this tool is not so much in that column, although there's a lot of power in that column. I would venture to say I know a lot of people have surprises come up when they do that column. Now you can change these quantities here to anything you want. And let's just go, I want to know, I generally get about 5 clients a month, but I really want to expand and start getting 8. And when I scale up, I know I want to have 20 to 25. And I know that once that starts happening, I'm going to start to get a little more popular, so I won't have to necessarily pay so much for a stage. I'll probably still have to spend the same amount here, but here I won't have to get on however many times. I won't have to get on 4 times as many stages, but I might still have to pay, $300 a stage. So it might still be $1,200. And here I might be able to do it for $1,000. And you can start to see the benefits of scaling. You can see that our net profit margin now has changed drastically as we move up into the individual areas here. Okay. So first of all, here, because it's 5 clients, let's say I had to pay $1,500 now. And then this is $1,500 too, and this is $2,000. This could be ad spend. This could be cost to get on a stage. It could be anything really. But you can play around in these numbers now based on how many things you plan to sell. And you'll know by looking at this number right here, okay, the net profit, and this percentage right here, whether you are profitable or not, okay? And it's really as easy as that. Now I'm going to jump back. So the numbers you've got to fill in are your price, what you pay to serve them, what your conversion rate is, how many leads you have to get that number of people, and then what your total marketing spend is, whatever form it takes. And all of a sudden, you now know if your product is profitable or not. You know what'll happen if you change your price. You may say, hey, I want to raise the price to $3,200 this year. Now what happens? Now we can start to see this. And if you're really connecting the dots, you now know that you could take this column, say you do get 5 clients a month, and say they spread themselves out to about a client a week. You now know you can start taking this money and putting it in this cash flow model every week, $3,200 every week. And you know that you're going to have to pay when you're going to have to pay your labor for each client. And you know when you're going to have materials. Now, like any forecast, when you fill it in here, it's not going to be right. There's no way a forecast is going to be right because there's so much information we don't know. But what happens every week when you start to go back in and put those actual things in, then all of a sudden you start to learn more, and the rest of those weeks get more and more informed, and you start to know more and more about what the balance in that checking account is. And I will keep going back to this line, because this line is the life or death of your business right here. If you do this and this number stays above 0, particularly if this number is growing, then your business is a good growing business. If this number is either decreasing or goes below 0, there are some things you got to change in the structure of your business. And there's really no other answer than that, right? So when we see this with our clients, what we do is we say, okay, some things have to change. Don't know what it is, but let's see what it is. A lot of times it's a mistake in the assumptions. Or we had a great call the other day, and I realized that we had a guy whose mindset was so working against him that he had made some really drastic math errors. Like he had multiplied costs by 4 without intending to, because in his mind, anytime he made money, it was going to disappear. So he literally built this model so that money disappeared. And that's the other thing we spend a lot of time on, and I challenge you to as well. What is your mindset? Make sure that you're looking at those old stories that you have about money and that you're not letting them sabotage your ability to do some of these things that really are very straightforward to do, but your mind might be telling you it's too complicated. I don't understand it. You can watch this video, you can rewatch this video, and then I challenge you to really look at the outcome. Most people are very pleasantly surprised. And if they're not, sometimes there's just a little twist in the business that can change it or fix it. Okay, back to the presentation again.
Got a few questions there, Pam.
Okay, awesome.
So one of them is, could this apply to brick and mortar franchise?
Absolutely. So let me go back in there and share really quickly. In fact, we use this for one of my brick and mortars. Share the screen, and we'll go right back in here. And in this particular case, I'll just give an example very quickly. We'll just do this for now. Okay, let's just say that we sell a barbecue sauce for $7.50 a bottle, and say we sell, I don't know, 2,000 of them a month. We know what the labor is to manufacture or to package that and distribute it or get it to Amazon or whatever we're doing. And let's just say that is, we've calculated that out to be, I'm going to make this up now, $1,500 for that many. So whatever, let's call it 2,000. Say it's $1 per package of labor. And let's say that the materials cost us $3 per package. So it's 3 times the 2,000. So that's 6,000. So here's our cost to provide that product, and our profit margin on $15,000 is 7,000. But we had to acquire that client. And let's just do this a little bit differently. Say that we're spending $3,000 a month on ads. And we know that we need to get 50 people walking past our, well, if we sell 2,000 cans, say we know that is 500 customers. Each one buys on average 4 of them. And to get 500 people in my store, I need to have at least 2,500 walk by. So let's say I have a 20% conversion rate, or I'm sorry, 10,000 people to walk by it so that I can get that many in my store. So how do I get people to walk by my store? I pay for these ads, and of the people that I get as leads, 10% of them come to me as, walk in front of my store. So to get 10,000 people, I need to touch 100,000 leads online, and that's 3 cents a lead, and that's $3,000 that I spend. So I have 4,000 in net profit. So the key here for you, whoever asked that, I'm not sure who did, but don't stop here at this 7,000. Make sure you know how much you're paying it for marketing as well, because that's an important part of the equation there. Great question. Thank you for bringing that up. Anything else?
Okay. Yep. Next question. I think you answered her question, but Daniela just wanted to know. So the first set of costs would be all the direct costs, and the second set would include all the indirect costs. Is that accurate?
Not all of them. Only the costs associated with acquiring that client.
Gotcha.
Okay. This is not going through all your other fixed costs. This is what's left to help pay for all the rest of those fixed costs, depending on how many of these you sell. So yeah, we're focused on the profitability part of your product right now only. That is a whole nother workshop for another day.
And then a follow-up was, indirect costs would go down then as sales go up, or are we approaching this from the perspective of, these are all the costs I incur to make the first sale?
These are all the costs that you incur to make an average sale. Your fixed costs like software and salaries that aren't related to providing the service and travel and professional development, those don't go down as a result of this. But these being profitable, this leftover $4,000 is what pays for all those, what we call fixed costs. But stay tuned, because we're going to have a workshop on fixed costs coming up here in the first quarter, where we'll dive into that a little deeper.
Awesome. And then a quick question about leads.
Ah,
This person said they have a very high cost per lead and has a
yeah.
product that requires 5 customers per season, but have problems with the leads. Where do you find your leads? Social media, Google, YouTube?
Yeah, so it really depends on the business, right? And all of us, I think, struggle with this. I think if you probably polled 100 entrepreneurs, 90 or 95 of them would say their biggest challenge is leads. So for me, for my business, a big chunk of my leads come from referrals, the majority of them, 90% of them come from referrals. 10% come from social media or workshops, that kind of thing. Other businesses are different. Like for the example I gave you here for the barbecue sauce, that is entirely Amazon and Facebook ads. So that's where all their leads come from. Like they have and they have a social media presence on TikTok, that kind of thing. So it depends on your business. Who is that? And can you tell me what your business is? Maybe I can give you a feel for clients I have in that business and where they get their leads.
That seems to be all the questions for now.
Okay, cool. Well, if whoever asked that comes back, Yenny, I think that was you. Feel free to tell me what your business is, and I'll share with you what, if I have any clients in that business, where they get their leads. All right, enough of that, guys. Stop that share and start this share. All right, back to this guy. Can you see the presentation again?
Yes, we can.
Awesome. All right, get you out of the way and get you out of the way. And we just walked through this. Price less the cost to deliver storage, service less the cost to acquire the customer. And to wrap this up, and this is going to, I think it was Jan's question or Danielle's question, what's left over from that exercise we just did, that $4,000 that's left, that's what's left to pay the bills and pay you as the owner of the business. So that's why it's so important to know how much that is at each different level of volume. Okay, and this is something we spend a lot of time in our workshops on, because, or in our membership on, because it's so critical. Forecasting revenue is absolutely critical. And again, you watch that enough times, you'll pick up exactly how to do that, and it'll become second nature for you. Now, as we're starting our businesses, somebody mentioned startup costs, right? The cost to get to the first client. Now there you're turning it, that turns it into an economics lecture, which is all about marginal cost. But the long and short of what that means is that in the beginning, we might not make money, and that might be by choice. Now, if we don't have a way to get credit, then we can't start the business that way. But if we do have a way to start credit, get credit to cover our costs, then we may not actually have profit for a couple of years. I was in that boat myself. The first 2 years of business, there was no profit. So it's not always going to be profitable right away. You may need to have to price lower than you think you're going to ultimately charge just to get your name out there in the world. So those kind of things also wrap themselves around profitability. I don't want to ever give the impression that anything I talk about is black and white, because with every person, there are subtleties, and with every business, there are subtleties. And these are tools that work in every business, but we need to make sure that you're thinking about the other things as well. Mindset, in the case of cash flow, stage of your business in the case of whether it's time to be profitable or not in your business. And then the other thing I would say is, as you look at this and you start to see that something is or isn't as profitable as you want it to be, your levers, your business levers, the things you can do about it are fourfold. You can adjust your price. You can always raise your price or lower your price. You can sell more or fewer of them by packaging and bundling them together or offering bonuses, that sort of thing. You could bring down your cost to deliver. You can deliver it more efficiently or effectively, or you could decide, I really want to up the quality on this, so I'm going to take my profit down a little bit. I'm going to spend a little bit more for a higher level coach to work with my clients, or I'm going to spend a little more for that ingredient in my brick and mortar store, or for that quality of clothes in my brick and mortar store. And then finally, your marketing spend, you can always adjust. If you want to drive quantity, sometimes you can increase your marketing spend. If you want to drive a higher price, sometimes you can do that with marketing spend as well, by elevating the quality or people's perception of the quality of your service. I'm noticing that Yenny has said the purposes of her companies, and she has two, are to help the Spanish community understand the United States basic economics. Okay, so you are looking for first language Spanish speaking people, and The question is, if you do this locally, one of the best places in the world you can do is Chamber of Commerce in your local area, and start to hone in that way, or communities or clubs or memberships where the people who would use this service congregate. So you can actually physically go make a presence to get more clients and leads around this. And then online, I know with Facebook advertising, you can target people. Now, if you're just starting your business, I will tell you, Facebook advertising, any kind of advertising online, is a rabbit hole. If you don't know what you're doing, you're very likely to waste money. So what you want to do, if you're going to go down that route, this is just my advice, unless you have a lot of time on your hands and really want to learn it for yourself and are willing to wait 6-9 months to see a result, I would have somebody help you with any kind of paid marketing. It's a specialty, and there are people who really know well how to do it. That's actually another thing I like about our membership, is that all of the people inside of it end up being each other's clients, because leads is something that's an issue, and we have somebody that's great with sales and leads. So anyway, that will be my suggestion, 2 suggestions, Jenny. And then also stages, find out where there are events that you could speak at and start to bring this to the forefront for the people who you need, who would be your leads. Okay, I hope that helps. All right, let's keep going here. Here's the third one. This one is interesting because so many people say, I don't want to know about exiting my business. I want you to hang with me for a second, because this is probably the single most important thing when it comes to your personal financial freedom. And people dismiss it because they think it's complicated, they think it's hard, and they think it implies they don't care about their business if all they're thinking about is selling it. Well, I'm going to tell you, having an exit strategy for your business does not mean you're planning on selling your business. What it does do is it puts all of your work to a much higher value return. It starts to allow you to build wealth from the work that you're doing, because you're going to see your business just a little bit differently after this. And every owner that hits that successful 5% mark understands this, what I'm going to teach you right now about their business. And 95% of the entrepreneurs out there do not understand this about their businesses. So anything I need to hit, or do we dive right in here?
Jenny just had another comment about that their business wants to work with the first and second generations. For most newcomers, it's very complex.
Yeah. Okay, cool. So it's all about finding out where they hang out physically, virtually, on at events, those kind of things. Events is a great, associations probably would have a lot of your people become a speaker at an association, join the National Speakers Association. Those are just some things that are kind of, I would have on my list if that's who I were looking for, Yenny. Okay, so let's keep moving. And we're going to talk about the value of an exit plan. And I really want you to stick with me on this. So first of all, your business is worth more than just the net income it makes every month. A lot more. And I'm going to show you how. If at any point in time in your life, for whatever reason, you want to get the cash from your business earlier than actually running it for the next 5 or 10 years, knowing what your exit strategy could be is an opportunity for that. So what it does is it opens up your ability to be able to sort of predict how much cash you could pull in an emergency, or because you felt like retiring at any point in time. So that's an important note. Third, if you're going to share equity or your company with anybody else, if you're going to give it to your kids, if you're going to let your employees have a share of your company, you need to know what your company's worth before you do that. Otherwise, like so many people do, you end up giving away the whole farm accidentally. You never have to execute this strategy. You never have to execute the exit strategy. I just want you to be aware of it, okay? But you never have to execute it. And the thing I want you to think about with your business that most people don't is it is one of your investments. For some of us, it can be your only investment, right? But just like a savings account or real estate or crypto or any other investments, your business is an investment. And at the beginning, it's a pretty darn risky investment, right? But it's worth something. It's an asset, just like your bank account is an asset. It's worth more than just your ability to make money from it yourself, okay? And I just want you to be aware of it. And finally, understanding what your exit value is does not mean you don't love your business. It means you understand your business, okay? And that you're probably making it a business. No, not probably. You are making it a business. If you're thinking about the things that would increase its value to others, even if you never sell it, you're increasing its value to you every single day. Okay, now we're going to jump out to a couple of worksheets to talk through this as soon as I find the worksheet. Here it is again, share that, and turn off the old camera quickly. Where are you? There we go. Stop video. Okay, so let's move on to, there are 3 tabs around value here. I'm running out of time, so I'm not going to go really slow here, but again, the replay will be available. So let me make this a little bigger. The first thing is, what is the value of your company? We're just going to take a little example here, and we're going to say that the revenue in our company is $500,000 a year. And we're going to say that we have labor costs of 200,000, 200,000, and we have materials costs of 50,000 and some other costs of 12,000. Then to somebody who asked about fixed expenses, we have some fixed expenses. We have my salary that we pay. I know that we travel during the year. And so just make this a little easier to see. Whoa, come here. There we go. I travel during the year, so that's about $1,000 a month for my travel. I know I pay to be in a mastermind, and I have bookkeeping done for me for the year. And so my net profit's $150,000. So if I'm slogging away every year, I'm going to make 500 in revenue, and I'm going to have $150,000 left at the end, and I'm going to have paid myself a salary of 40,000. Say I'm a solopreneur here, just for this example. Now, there's this thing called a multiplier. And I'm going to explain what that is, but I've got 2 links in this spreadsheet as examples. But every industry has these multipliers. And it's either a multiplier of revenue, or it's a multiplier of something called EBITDA. Don't worry about that term. It does not matter. It stands for earnings before interest, taxes, depreciation, and amortization, but that matters not. That's just the term you'll see when you go to these links. And it'll tell you what the multiplier is for your industry. I'm just going to show you one example. I'm going to click on one of these links so you can see where it goes, I think. And I'm going to have to share this screen with you now, so hang on a second. Stop, share, where is it? Right there. And here's what it looks like, okay? And you'll go down this thing and you'll see it says multiplier of EBITDA. And you'll scroll down here and find what you do. And let's just say that I think somewhere they have bookkeeping or finance services. Let's pick any old one. Let's pick miscellaneous publishing. Let's say I'm a publisher. So miscellaneous publishing, that multiplier is 10.08. Now there are a bunch of these out there, and I want to talk to you about this in a second. This is not the final answer, but we're going to drop 10.08 into our example. And then the other thing that'll happen really quickly, and I know you're not seeing my screen yet, but there's the second one is actually a link that goes to revenue multipliers. And it's called price to sales. This would be the column you would look at here. And let's say we find publishing here. They should have it. Publishing in newspapers is 1.05. All right, so now we're going to go back to our spreadsheet. Once we found those 2 numbers, we're going to share our spreadsheet. And we know that revenue is 1.05 and EBITDA is 10.08. Okay. Now, what you have out here is the range of values that you could sell your company for. Okay. Now, there are things you can do to influence that value, because this is a perfect world and everything and that's the right multiplier, and somebody wants to buy your company and all of those things. So there's a whole master's degree in exit strategy. All right. But simply put, I want you to know what your multipliers are for revenue and for net profit, so that you know somewhat of a range that you could be in. Even if you want to say, hey, I'm new and there's no way I'm worth what the big guys are doing, whatever, it doesn't matter. Reduce this by 50%. You know, say that this one is a 0.5 or a 1, let's just call it a 1 multiplier, and this one is a 5 multiplier. But you're gonna get a range here that is what your business is worth, which you can see is worth a lot more than the net income you're getting year over year over year. What this is doing, very short version, is predicting what a buyer might think the value to them is. It's what they'll get out of your business over the next numbers of years. And yes, these multipliers apply everywhere. It might not be the same multipliers. Every country is going to have different value for different industries. So you just want to find the same kind of a table for whatever country you're in. Okay, so here's something you know. Hey, man, I can get money out of my company if I ever need to. I have an asset that's worth some money. Might not be exactly this, but it's worth some money. So what's the second thing? That amount right there, whether you will be at the minimum or the maximum, whether you'll even be at the minimum, will depend on a whole page full of drivers. Like it's a book a mile long, but some of them are. And the one in particular I want to hit on here, let me make this a little bigger. Some of them are the freedom of the business from your name and as an owner. So let me just give you an example. I run a accounting and bookkeeping business, and coaching with me is part of that name brand right now. Well, if I were thinking about selling my business, I would probably start getting other coaches and training them to do what I do and renaming things, moving it away from my name towards another name, so that when somebody goes to buy this company, they don't think, oh God, if I'm not Pam Pryor, I can't do what this business does. Okay, so that's one of the things. So how free are you from your business? And this is something I'm going to circle back to in the third tab, which has nothing to do with money, but is so important that I cover with you that I pray you don't hang up now. I pray you stick with me here. We're almost done. The second thing is that you have solid or reliable financial reports. The third thing is that you have systems and processes in place. These are three very important drivers no matter what industry you're in. So what I want you to do is evaluate whether your freedom, how you would weight these three in your business. And just to make it simple, I'm going to tell you what generally for me the weighting of these three things is. Freedom of business, freedom of the business from the name of the owner, I have about 20%. Solid, reliable financial reports is about 30%, and systems and processes is 50%. And that just means having things in place that somebody else could run because they're documented, right? So they know I take tab A, I put it in slot B, I create the thing, I sell it. If all that's documented, there's a ton of value in that because they can then take it, replicate it, make it grow. Okay. So first of all, I'm going to make sure that adds to 100. If I did this wrong, it would flag it and tell me, fix that. That doesn't add up. So these 4 or 5 things have to add up to 100%. Then I'm going to go over here and evaluate my company. Now, right here, I'm pulling in the unadjusted value, the low value from this spreadsheet over here, saying it's worth about 50,000. Now, there's some discounts to this price that happen if I don't have these things in place. So if my freedom from the business as the owner is great, and we're using these titles here just for the record, and if my reports are solid and solid financially, and they're great, and my systems and processes are great, then you can see the adjusted value for my company will be 500,000. But say that I really don't have any financial reports, they stink, and I really only have good processes. You can see the value of your company going down, 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 down. And that's why it's important if you're starting out at weak on all of these, whoa, that looks funky. If you're starting out at weak on all of these, you want to focus on these as business objectives for next year. So that's why I want you to get started on this so that you can say, hey, yikes, I know I'm weak on these 3 things. I'm going to work on them. And let's say that our intent is to get the freedom of the business from my name happening next year. And I'm going to be great at this at the end of the year. So I'll get my value up to 300,000 from the 500,000, or get it up closer to my 500,000. So I'll be at a net 60% of what that total value is. And then next year I'll work on this, and the next year I'll work on this. Or if you love this workshop, you'll work on your financial reports this year, and you'll become good at being free from the title, whatever it is. Okay, that's easy to work. Now I want to go to the last one. This one is the most important and also the most fun, but also the most pain in the neck. You need to know as you move into a business that's growing bigger and bigger, you're going to get more and more tired. So what I want you to do is do a time study of your choice. Take your pick, but whether it's a week, let's pretend it's a week. All right. And say you work let's just pretend you work 40 hours a week. But I want you in here to put the number of hours you spend on each of the activities. And your activities will be different than these, but I just put some examples in here. How many hours in that week you ended up spending on whatever the activities you were doing in your business, and be as specific as you can. So in my case, I just picked some examples that in the past I was doing work on. So let's just say that reconciling, I'm just going to put some numbers in here till these add up to 40. Okay, so now my hours add up to 40. I'm trying to get this number right here to be 40 because I want it to be 40 per week. And say these were the only things I do, so I don't have any other things that I did in that time study. But when I broke that time study down, that's how my time was spent. Now I'm going to go through here and do something kind of fun. I'm going to first of all go to the love it or hate it column, and I'm going to give it a 5 if I love it and a 1 if I hate it. Okay, so let's just make some stuff up here. I love reconciling. Sales calls, I kind of like. Taking calendar, I don't. Email, I sort of like. Social media filming, I love. Posting, I do kind of like it. Copywriting, Bookkeeping, I love it. Financial modeling, I love it. Client calls, I love them. Marketing strategy, I like it a lot. And building active campaign automations, I love it. Okay, so then I want to say, am I the only one that can do it, or could anyone? Not anyone. It doesn't mean it's easy. It means, are there other people here who could do this for me? Okay, so are there people who could do it just as well or better than I can do it? Okay, so if I'm the only person that can do this for my business, it's going to get a 5. If there are other people who could do it as well or better than me, I'm going to give it a 1. Okay, so reconciling accounts, anybody can do it. Sales calls, nope, I pretty much have to do those right now. I challenge you on that, though it may not be for the long term. Taking out on the calendar does not have to be me. Email doesn't have to be me. Social media filming does. Social media posting does not. Copywriting does not. Bookkeeping does not. Financial modeling, client calls, marketing strategy kind of needs me, and building campaigns maybe only a little bit. Okay. And then over here, we're going to say whether these are high value, yes or no. Is it a high value use of my time to do this thing? So reconciling accounts, nope, not a high value. Sales calls, yep, high value. Taking care of the calendar, not high value use of my time. Email, no. Social media filming, yes. Social media posting, probably not. Somebody else can do that. Copywriting, no. Bookkeeping, no. Financial modeling, yes. Client calls, yes. Marketing strategy, yes. Building automations, no. And then what you're going to see here is these are going to show up in colors, with red being the things you should get off your plate. Okay, so you've kept track of your time for 40 hours. You've dropped stuff in here that you know now which things you shouldn't be doing. Any of the green ones you should be doing, any of the red ones you should think about not doing. And the redder it is, the more you should get it off your plate. Come up with what your actions are going to be to get rid of it. So I'm going to get a VA for this one, a VA for this one. And I'm going to show you something here in a second. Copywriting, I'm going to get a copy. I'm going to outsource, say copywriting. You have my team do the bookkeeping. And those are the big ones. Reconciling accounts, I need to have my team do it. So now what I'm going to do here is tell you how much you're saving, even though you're going to tell me I don't have the money to spend on these things. If you say I don't have the money to spend on these things, I want you to think for a quick second. This number here is pulling your annual revenue from the very first tab that we did. And it's saying that I work, let's just say that I work 40 hours a week for, hang on, I did 40 hours a week. Yeah, 40 hours a week. There we go. And I do that 52 weeks out of the year. So I'm going to make this 52 weeks times the number of hours that I work. So plus 52 times this 40 over here. That's what that formula does. Sorry about that. So I work 2,080 hours a year, let's say, and it could be 60 hours that you work, in which case you should have 60 hours accounted for over here. The value of your time annually is $240.38 an hour. Okay. To hire the VA, it's going to cost you, let's say, even $20 an hour. How many hours are you going to save per week from getting this off your plate? How many hours come off your plate? So, geez, if I'm not taking care of my calendar, I look at my time study, I'm going to save probably 10 hours a week. And if they also do my email, I'll save another 2 hours. So I'm going to save 12 hours a week on that. How many hours is it going to take my VA to do the task? Let's say it takes them a few more because it's harder because they don't know my stuff. Say it's even going to take them 20 hours. I still have annual savings to this company of $129,000. The reason is that every hour that you spend doing something other than servicing a client, increasing your revenue, thinking about the strategy of the business, driving sales, is an hour that you're losing $240.38 because of your revenue amount. And it's basically saying you as the owner are responsible for generating that revenue. So every hour you spend on the business that's not working on that revenue puts that revenue number in jeopardy. And it actually costs you a lot less to have a VA do that work for you. The two places people get stuck here is what I call the only me syndrome. And they start out with, oh, well, this is all fives. I'm the only one who can do these things. It is not true. That is a mindset trap. It's absolutely not true. Do not get stuck in it. If any of these, be honest about these and think about the fact that there are plenty of things in your business that you can hand off to others. It's a trap, and I know it because I still get stuck in it, but it is not a truth. The second thing is that you're going to forget that when you spend time on the business, you're actually costing the business money. Okay. So that's those three tabs. Now we're going to hop back and go to very quickly back to our presentation here.
A really quick question, Pam. Kimberly
Yep.
said, freedom of value of owner means the company can currently operate without the owner.
Yeah, that it doesn't rely on the owner or the owner's name to get sales. Like it usually what that means is it's a brand name and the brand name's not the owner's name. Like it hasn't been built around the person. Like, for example, Michael Michalowicz wrote Profit First. Nobody cares who's behind Profit First. He sold it years ago, but the people now run Profit First. If he called it Michael Michalowicz Accounting, then he couldn't have sold that business, if that makes sense. Okay, value wrap up here. The things to focus on that are going to drive that value number up in your business are cash flow, profitability, which I've given you 2 tools to look at, okay? And then systems and processes, making sure they're in place and documented, making sure you have solid financials, and making sure it's got some prospects without you in the middle of it. That's often the last thing to fix, right? But there's another value other than just the value of your company to freeing up your time. Because you can't be an effective business owner. You can't be happy in your business. You're doing this to make a better life. And if it's sucking you into everything, then you're not going to be making a better life. All right. I'm going to wish you all a wonderful, happy new year. I truly hope that you grab this workbook, sit down and spend an hour ahead of time on your computer, thinking about these 3 things. If you own a business and you're ready for it to be one of the successful 5%, spend a little time on these 3 things. You will be amazed at the difference it makes in 1 quarter. Happy New Year, everybody. Take care.